Hi, welcome to Mondays with Melissa. Let's talk about retirement accounts and Medicaid benefits. In order to qualify for Medicaid, a person can't have more than $30,182 in assets. But those assets don't include retirement accounts. Those assets include things like checking, savings, money market, CDs, investment accounts and brokerage accounts, stocks and bonds, life insurance, cash values, but they don't include IRAs, 401ks, 403bs, and some other retirement accounts that people will have changed their retirement benefits to. It's a case-by-case basis. The good news is you can have money in your IRA, your 401k, your 403b, and still qualify for Medicaid as long as your other accounts are under that $30,182 number. So you can have $20,000 in a checking account and a $200,000 IRA and still qualify, as long as your retirement account is in payout status. When you have a retirement account, you have to start taking your required minimum distribution at 72. That means you have to take a certain amount of money each year, and that's based on life expectancy. If you're on Medicaid and you have a retirement account, you still have to continue to take your minimum distribution, but Medicaid is going to budget it on a monthly basis, so you'll have to take it monthly instead of once a year. So when you go on Medicaid, they look at your income, Social Security, pension, IRA distribution. Typically, those are the main sources of income. So your IRA distribution, if it's $12,000 a year, you would have an extra $1,000 a month budgeted in your income for Medicaid. If you are a married person, Medicaid will allow you to continue to take that required minimum distribution. If you are a single individual and you apply for Medicaid, they actually require that you use their charts in determining your life expectancy numbers. So your required distribution is actually going to be maximized. It will be higher than the required minimum distribution, and that will get counted towards your monthly income. Just keep in mind that if you're in a nursing home, your monthly income goes to the nursing home every month and Medicaid picks up the difference. If you're a married person, that number is going to be adjusted based on how much income your spouse actually has, the spouse in the community. And then if you're at home and you're on Medicaid, you're allowed to keep a certain amount of income every month. And if you have more than that, there are certain trusts we can set up to protect any excess income that you might have. So it can get a little complicated, and that's where we come in to help people calculate how much income is going to be pulled from their IRA or 401k, what their distribution has to be in order for them to qualify for Medicaid. If you have any questions, feel free to leave them in the chat. Otherwise, we'll see you next week.